learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in at April 30th, 2020, and the stock market is going to crash, but not tomorrow, not this week, and probably not for the rest of this quarter. What am I referring to is what happened with Mr. Jerome Powell today. We saw the Fed chair speak about the economic situation. They kept rates the same, but we got some more guidance, even though the Fed decided not to give interest rate and inflation guidance, more or less. So we still got a lot. It was very, very both surreal, and it gave us a nice clue here for earnings. And that is the next thing that we need to talk about here with as far as all these companies so far. We have not seen the Grim Reaper. We will see by the end of this week. We got a big earnings date tomorrow. Really just big companies, not as far as, the amount of companies that would move. If anything, that was today. We saw Spotify, you saw Google, and then we saw Facebook today. But we have a lot of earnings we need to go over, and there's going to be a lot of continuation. So we're going to do the same thing as yesterday. I got the keys for you. I got the plays, and I'm going to go over every single earnings company for you guys. It's a small list for the most part, but I'm not going to be focusing on all of these. I'm really just going to highlight the ones that are usually going to move. And if you did see last time, the one I didn't include was eBay, and they kind of ended up being a Grim Reaper, but not as big of market cap. But ServiceNow had a great move. Qualcomm, it did it very good for Qualcomm, but not that crazy. And then Align made one. That'll be a good continuation. But we are still going to get some companies, not as many. So I have a few there, but there is a unique situation with the premiums, even with what we saw today and even what I'm expecting that I want to go over, because there is going to be a lot of good continuation. So I just hope you guys are ready. It's going to be great. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/the stock market. You can watch the plays live, ask questions, see the earnings, anything. Even watch Jerome Powell live on a Zoom call, which was really weird, but okay. And the most important thing you need to do, post your watches below. Let us know what you're looking at. You got any plays, comments, remixes, anything. What are you playing for earnings? Did you play the Facebooks? That was a fun play. Earnings season's back. So post what you're going to play, and I hope you guys are ready. I hope you're excited, and I really hope you are watching this because you love trading, and I love you. And if you love me, even if you don't love me, I love you, and just positive blessings your way. God bless you. Just smile, okay? I don't care. I know you can say it's annoying, whatever you want, just smile. Even if it's a fake one, just give me that, and then drop your shoulders, chest to the sun, okay? Don't forget. I think this is. But right off the bat, as far as the keys tomorrow, this was the thing. Powell spazzed on that conference, and what I mean by that is he said a lot of stuff. Some of the headlines were crazy, even to the point he said Q2 and Q3 is going to be something we've never seen before. He even said the Q3 rebound may not even be that good if there is something that comes back with the virus. And now there was updates on Gilead and the drug and all that, and we'll talk about that. But he said a lot of stuff, but in two ways, it was very bearish and bullish at the same time. Even the market did like it because he let it known. He's like, Jerome Powell, the Fed chair, said, we won't run out of money. He said, we have all the money. I mean, so again, very surreal if you think about that. You can make jokes all you want, but he really did say that, and it's really the truth. And letting the market kind of know that is positive. He's pretty much saying that whatever they did now, although they moved the rates, they have a lot more tools. And then he said, even with everything happening now, they're going to change a lot of stuff. And based on the tone of what Powell said, it was pretty much coming off. This is what I came to the conclusion of, was that the recession has not started. I think. And all the questions are implying recession. It's just like Facebook earnings. It's just like Snapchat, any of these advertising companies. Everyone's implying ad spend was going to be down. Everyone's expecting your first 2 months of the year to be good and then bomb in March. It's the same thing with recession. When you even hear the reporters' question and even their responses, it's literally the conversations occurring as if that is implied that the recession is going to happen. However, that it is not arrived yet. And that's what I was getting at, or that's what I thought he was getting at. And then he mentioned some other stuff that was kind of weird too, and I only think it was weird just because he pretty much said, hey, we have money, we're ready to loan a lot of money, and then again, they're going to change the term sheet on all the credit facilities and what they're going to do with just even the open market. But he said they're ready to loan, but he said we cannot loan to insolvent companies. And he was reiterating in the tone pretty much I got out of it that Jerome Powell is saying, hey, we have loans, and it seemed as if he was encouraging people in any situation, any companies, to avoid bankruptcy. And he talked about the waves of bankruptcy that we've talked about over the last few weeks here, where that will be that next wave. Again, he hinted at it. And again, today we saw news of 2 bankruptcies, but he was pretty much saying this tone like, hey, if you are in trouble, come to us now before bankruptcy, or come to us while your assets still have some worth. Again, you guys are like, well, think this again, the stock market is up. So if you know a recession's coming, you know you're not prepared, you're not giving guidance, your 12-month forecast is you are clapped. Your shares aren't going to be worth that much, but if the market's holding up and you have collateral now, you could still get a loan. He's pretty much saying, he said, the Fed is allowed, and based on the rules, we could give you money as long as you're not insolvent and there's some level of collateral. If the collateral change in a couple of months, oh well, you got your money. You need not say nothing about this. So that's what I got from it, and that's saying something, and that's what I'm saying. The market is definitely going to be dire, and probably by end of 2020, even coming into 2021, we're going to see more volatility, but it is clear there is going to be some level of patience required with this, and it's not going to happen almost immediately, and it does put all eyes on Q2. So that being said, Q2, Q3 will be pivotal. But even now, after this news, even how we saw all these earnings, we're going to have a better idea of the range we're going to be following. And then even with that Fed news, if the market is going to keep their eye on Q2, Q3, and we don't know, the market is going to set a range up until there and stay within there up until we see it. Again, it's how the market's going to price it in. So the market's like, okay, well, if we know we're going to be looking that far out, things are like this, they're going to price in a certain range. So if you didn't understand that, there you go. But that, and then finally, like I said, though, there was 2 bankruptcies today. There was Hertz, or there was talks about them. It was back and forth, but again, just even the talks of it, usually when you start talking about it, it's a weird conversation to have. It was them, and then Chesapeake, which was, surprising, not surprising. Surprising because they've done like reverse splits that, I thought they used to be a $2, $1 stock. Chesapeake has been in dumps. They've been clapped, and I think it's kind of funny. I think Icon has a stake in both Chesapeake and Hertz. Not too sure on that. Someone could double check that, but it was surprising to see it at that price, and then for them to even just go back to zero after all this stuff they've done in the last few years. That's what made it surprising, but then not surprising because they've been awful. They have a lot of exposure. They have a lot of debt. They've been around for a while, and they've taken a lot of punches in this whole oil thing from even 2014. But if anything, though, we got earnings here. I think that this earnings is going to be pretty chill, and today was a good thing. If you guys didn't realize it, all your you saw breakouts, 16% on earnings. On Facebook, that's a lot of money. That's a big market cap. I think ServiceNow, even again, Tesla, 14%. This is 2 standard deviations. You guys see 7%. That's that limit. Usually some will price in 10%. The fact we're breaking out and then some companies didn't, like Microsoft, this is telling you something, but there's going to be opportunity. And that's what I'm going to even say is a key coming into tomorrow, is that now things are going to start pricing into this range. And like we're even saying with Amazon and all that, after Amazon and Apple tomorrow, we're going to have a better idea of how things are going to move. There'll still be big companies and big movers, but all of these guys are going to have an effect on the market. So now tomorrow with Facebook in the morning, there is going to be an effect. Microsoft did good. Again, Tesla, things did good. It's going to bring things up, but now some of these companies didn't report. So we saw that today where Facebook shot up the first hour, and this is pretty much, I'm already getting into some of the play aspect of this, but you guys saw Facebook go up really, really early. Even ServiceNow was probably the best example, because if you bought these in the first 10 minutes, you made 400% on the earnings run up. They went up 10% before they even reported. So they still moved that 7%, but being able to move 10% and then another 7%, that's an outlier or something that will pay you a lot of money on cheap options. But what I'm saying is now with all of this positive effect, even again, Qualcomm, you're going to see this effect tomorrow. Hopefully we will see, but you saw it this morning. Again, we were talking about it. Remember that first drop this morning? Oh, wow. We'll turn after. I remember if you were watching live, I said, we called it out around here. I said, if anything, that'll be the moment. And it was. Picture what you saw this morning on a lot of these companies. So there's going to be good earnings plays to set up for, again, with Amazon, Apple, and all that. But at the same time, there's going to the same effect on continuations. But we have a lot to talk about. So let us get into the plays. So right off the bat, I pretty much already explained that to you, but continuations, I know you saw it with Spotify too. So not only did companies break out, I showed you what they're doing after the reports. You still got to pick and choose. Not all companies are hitting, but the continuation. So now the bigger companies like Spotify or some with big movement, they had big earnings continuations move. So this is what we could take advantage of. And Google's going to have a continuation still, even though today you would think it's not just one day after. So keep that in mind. And also small amounts. Playing all of this stuff. We'll go over the plays and what we made, but you'll see it. Playing small amounts is giving us good exposure. You have to think about it now. If it's going to be these slow movements, and if we're not going to see anything crazy, and if you want to catch the Grim Reaper, you can't do it big. That's what we got to. We got to adapt and adjust after kind of seeing these earnings. You're seeing how confusing it is. We got to switch tools. The big amounts. Big volatility, it's not going to be there. If we're going to be picking and choosing, we need to scatter the seeds, and that's what I've been doing, and that's what I did there, and I kind of realized there. So I got more earnings, but I'm spending less and less money, especially with the profits we have, and we lost some money too. So kind of makes sense to scale back, but that's what I'll say with all of this. If you want to go with earnings, and again, this is a recommendation. But I'm talking to myself. So if I was gonna want to parlay, let's say I wanted to go big on earnings. What I'm gonna do is I'm gonna hit one of these small plays. And then if I want to parlay, I'll scale the winnings. It's like a gambling strategy. I don't know if it's like Nightingale or something like that, Earl Nightingale, strangest secret in the world. But what it is that it's like go to the blackjack table, put down $10. If you win, your next bet, you could do 20. And then if you win that 20, the next bet, you go 40. And you just pretty much take your winnings and then you go there. I would say leave a little. That's what I do. But if you want to go big, that's the best way to do it, I would say. Otherwise, you're going to try chasing all of these plays, especially these weeks where there's a lot of companies and there's a few of these smaller ones. And then now you're seeing, again, we were just at a bottom there, and you're seeing the volatility and expectations, and there is still a weird level of volatility. There's opportunity. We want to get our hand in the cookie jar, but ultimately get exposure by placing smaller pieces. So that being said, as far as plays that I'm looking at tomorrow, AMD is going to be a great continuation. Maybe this came out of left field for you, but you're going to have Western Digital earnings tomorrow. They went up after hours. We already see them, but AMD already reported. And now the thing is, while every company went up today, literally market closed up 3.5%. 3.25%. You saw these earnings move. They were still reacting to earnings, so they went down. So whatever they do tomorrow, this could be effect, but they might get a positive effect from everything. So I'm going to be looking at them to go up and make a move if they're able to bounce. But anyway, really, I just want to see the premium, and that's the advantageous part of this. We don't really need to figure out the direction just yet. However, it's observing the premium on the options and now saying, well, all these options went up a lot. This had earnings. It was kind of suffering that earnings day. It didn't do much. This should have killed premium on both sides. And well, that is exactly what happened. This is why we look at option prices. Look at the calls. Any of these calls, even the calls in the money, that might blow some of your minds, but well, actually, no, it makes a lot of sense. But they all got clapped, but look at the put. Look at the change close. We have a video on this, but you see it. It's the same thing. Even the puts went down on the call. So you're telling me both sides lost. That's why you should have sold premium. But it's showing you that contracts got cheaper on both sides. So that's what I'm saying. Let's see the premiums. And if we could get a clear direction on the stock tomorrow, how it's going to continue, know the contracts will be in your favor. So that's why I'm pointing it out, because I like that, and that's something I'm going to be looking at tomorrow. Then WSDC for the earnings run-up. So we're already in that play. We've been positioned, and they're doing good, but I like WDC because now it was already making a move pre-market. Where is it? Or post-market? I don't know. But it's starting to move up. It could benefit off of a lot of this bullishness with all the other stuff. That's just what earnings does, especially for the big companies. So the fact that they're even doing that after an 8% run-up, watch for them to kind of do that first 10, 15-minute thing like ServiceNow. So they're either going to cuck, or after that first 10 minutes, it'll do its next earnings run up, and then the premiums will get really crazy. That's another one. Unfortunately, both of those are in the same industries. And then finally, Apple for earnings. So they have earnings tomorrow. I like them a lot. I already have plays. We already got kind of some YOLO ones, but I think that Apple could move a lot, and I think it's just going to move like Facebook, meaning where it could do 17%, I think, up or down. So both ways, I want to see. Let's look at the contract prices, but we're already positioned on those plays, so we will see what happens. But then as far as everything else, as far as the plays we made today, we did the earnings plays that we wanted, and then I got in the morning, I think HT was the only other one. I got May 22nd, so I spent a decent amount, like around $200 or so. I got 255 calls for Home Depot. It covers earnings May 22nd, just right after. I'm hoping there'd be a run up, but those went about like what, 50%, a little bit. Or no, not even close. We'll just look at them here. 22%. Yeah. So I spent $234 on that, and then I grabbed a Tesla put debit spread, spent $150. I just wanted to protect it because again, we had that Tesla 960 1040 call spread. We were down on that, but we'll see. We were barely down on it, but we have the Tesla plays for May 15th. So I wanted both ways. I was just saying if there was a move, and this is what I did. I got two But you could do the same thing with one. You could have played Tesla for $75, still a lot of money, but they still even had some 50-cent options. But the fact that these are moving, you could still get in cheap. And this is what I mean by scattering the seeds. And then this is exactly what I did with Facebook. So with Facebook, I grabbed 2 of the 225 calls, and I grabbed them at 37 cents. They're weekly. So I know they're weekly, but I said, well, I might as well scatter it if they move a lot. So these ones should be good tomorrow, but be careful. Ghetto spreading weeklies is the best way to protect it because the values will go up and down. And I'm going to tell you now, don't get mad if you sell too early. And at the same time, don't hesitate to take profits if you don't know how to trade any of these weeklies. They're expiring this week. They will be extremely volatile, especially with earnings, especially when the stock goes up. And don't have any expectations coming into the morning. We really don't know how these will value. However, we have those September calls. So now, even though the stock shot up, even if you have the weekly, you don't know if that's going to make you money. You don't know exactly, unless you're in the money, you really have no guarantee of profit. However, if you got time and it makes a 17% move and you got like up till like September, those plays are going to be good. They'll probably go up like 200%, but it's a big position. I have like $2,000 in it. So that should be the bigger earnings. And then I did ServiceNow. $55 for 2 of them on the 430 calls for June. So I wanted to get time. I said, I'll go cheap. I won't do the weekly. Got time. Then I did $40, 120 total on the 195 puts. And then I did 150 on the Align play. So I got a little crazy on the Align one. You could watch it live when I was going through it. I had the order at like 50 cents. It was just so illiquid, but I don't know. I felt Align, but I'm 0 for 2. Any of my feeling, my Google feeling, 600, Align, 150. At least the Facebook with $37. Yeah! But yeah, so that's pretty much it as far as that goes. And then the final plays, again, a lot of continuations, a lot of earnings, and actually even to give you guys the list. Tomorrow, the big movers, Amazon, Apple, we're in those. I'm probably going to go for more Apple plays. I don't know, or maybe readjust the Amazon puts. We'll see. Gilead, and I'm still holding those, just holding the original play. I might be interested in the May 15th ones, but again, they got they got the news that by Wednesday tomorrow, Gilead may get emergency approval to be able to start treating people with remdesivir, which is crazy. United, I don't think it'll move. Visa is I'm borderline on Visa. I usually don't think it's a mover. Atlassian, I don't know what to say, but them maybe, but then Western Digital, I think that'll be a good pre-mover. But other than that, you're really just going to be playing the continuations. I think like McDonald's and the healthcare companies, I didn't do that, but overall the continuation. So there is that. And then, yeah, we got all those companies. I think we've already gone through all of those. But then, like I said, Western Digital and all that. Then McDonald's, again, that'll be a continuation. We played the Home Depot. And then Snapchat, they're killing it. They're reacting to Facebook. They're going to do good as well on this. So they're at a unique level because $18 is a big point for them, but they're already back pre-corona highs if you think about it. So they could keep going and they're getting close. So I sold covered calls on that too. So I'm going to roll those overs, but I looked. The situation is looking very, very bleak because I'll pretty much I'll have to roll over to like August and trade 4 months of time just to get my money back. But I will be getting a lot more if it never goes there. So I'll show you guys that tomorrow. Get ready with what I'm going to do with that. But I'm going to be looking to close out my covered call position. You guys can see here, it's on May 15th. So it could come down by 17, but just in case, I'm going to roll that over. And overall, long-term portfolios, we are up 3%, 2.97%. So if you haven't checked out the long-term investing video, you should, because if you're trading options without a long-term account, you may be missing out on some really, really good opportunities that are safer and more consistent and will give you what you're desiring through trading, believe it or not. A little bit of patience, baby. But I like Snapchat. They could be good, especially towards those highs. Again, Guild will be interesting tomorrow. And then TLT, they had was it TLT? Oh, no. Which one was it that went crazy? Oh, Gold. So it's gold. That's what I wanted to look at with the Fed. I thought it was TLT, but TLT got clapped, but gold went up. I'm going to keep an eye on them, and then TLT is reacting with the bonds, but keep in mind that range I'm talking about and everything else. You'll start to see dollar and bonds move here probably by next week, depending on what happens. But considering what Powell said and everything, I'm seeing the pace of all this. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you in the game. Control the budget. What did you get from this? We got to scatter the seeds, keep it small. Don't force it. We're going to have time. A lot of stuff is there. It hasn't hit the market yet. Pricing, think about the divergences and everything, but keep your head in the game, baby. Do you love this or not? If you love it, then, well, you already know. If you don't love it, are you willing to love it? Are you really putting in it? Otherwise, just go make a long term and go get some rest. Go get working out. Go work. Do something. But the cult loves you. I love you. I'm going to see you in the morning. Let's go.